Welcome to Module 5, where we'll be looking at the market participants of the entire ecosystem of trading, with algorithms and high frequency trading included in this, because it's so critically important as a discretionary intraday trader to really know what the entire market landscape is made of, or the entire market ecosystem. And really the reason why a lot of these order flow patterns exist is because of all the various different execution strategies that are employed by these various market participants, and especially over the last 5, 6, 7 years since the rise of the machine in the form of these HFT systems and algorithms that really dominate 70% of the liquidity of the market and what we trade in the future space, that it is so important to understand who you're up against and what execution strategies you're up against in order to make your best informed decision to profit from these plays. Okay, we'll look at the content roadmap for the rest of this module, and do remember we are looking at the participants, and I want you to understand from the outset we are just going to briefly touch upon it in this module, because the whole objective of the course is observing the various price ladder patterns, but we cover it. But if you want to investigate any further, then I do give you a couple of links to go have a look, and then you can really explore the landscape of all the different types of strategies and systems that do exist in the financial market landscape, and specifically in our case in the future space. So slide 3, we focus on HFT strategies. Slide 4, we look at a graphical depiction of the marketplace, and really when you use these graphical models, it makes you understand a little bit clearer of where our place is in the entire ecosystem. Slide 5, we look at execution strategy patterns. Slide 6, we effectively define an algo. Slide 7, what are the objectives of algorithms and HFT strategies. Slide 8, we look at the objective of discretionary traders. Slide 8, the objective of discretionary traders within the world of the other market participants, and what we're trying to do when we observe these other execution strategies. Slide 9, we quickly look at a platform to develop your HFT and algos for those of you who are interested. It's not the purpose of this course, but for any of you who are interested to really broaden your understanding of this space in algorithms and high frequency trading systems, we show you a platform. Slide 10, we talk about further reading that you can really explore, and then slide 11, we give you some key additional resources if you want to expand your horizon in the space of algorithms and high frequency trading. Okay, let's have an understanding of the various types of HFT strategies. And as you can see in the video, it's really the depiction of effectively the world of the matrix. A lot of people look at it as these really sophisticated quants and mathematical geniuses who design these machines. But as a discretionary trader, we trust our own human abilities and our own ability to decipher markets from the financial future space. So our traders on our trading floors, of 99% of them are discretionary traders, and many of them are able to decipher patterns from the algorithms a lot more effectively and quicker. So don't ever be intimidated by this space, because until a machine can replicate this master operating system that we have within our skull, I would think that they're a long way from having the ability to compete with the discretionary trader. Now, HFT strategies. Let's define HFT and algorithms. Again, as I mentioned, this is a formality section with no exercises, but necessary for the rest of the training program, because when we talk in quite a few of our latter videos, when we start illustrating various trading strategies and plays on the order book and the price ladder, we'll make some references to certain types of algorithms that we might be observing in the marketplace. Again, most of the section is a self-study section to understand your major participants in the marketplace. and before we clearly define them, we will look at their place in the global financial market participant ecosystem, and why it's important to understand them, as they actively contribute towards 70% of intraday market liquidity. And then we also look at the types of market participants whilst we look through this entire ecosystem, and the spectrum of market participants, which is really has depth to the nth degree, but we look at really the major ones that we're trying to define. And I want you to click on that link just for you to understand the HFT, the participants, and really important for you to gain a firm grasping. Okay, well now let's have a look at graphical depiction of the marketplace. Now really, the marketplace on where global financial capital shifts in this wide ocean of money across the planet, where money shifts from one economy or one continent to another continent, from one country to another country, from one economy to another economy, and as various prospects for investment outlook changes, and you just get money shifting around the world. And it's really important to really divide the people who decide how this money is allocated around the world is into investors and speculators on the left hand side of the slide. So really the decision of where to put your money really starts, and really the larger time frame in participants who shift large amounts of money are your institutional investors, such as your banks, your insurance companies, your retirement funds, your mutual funds, your sovereign wealth funds, pension funds, trustees. And then in some form or manner, when they decide to reallocate their capital or reposition their portfolios, then you start seeing the orders come through in the marketplace. And depending on the economic climate or the geopolitical environment we live, will determine the level of intensity, the level of the tsunami effect of capital being allocated to the marketplace. And then we see that on the price ladder. We see those orders going through on the price ladder, and it's when these large institutional funds are having to reposition themselves with new information that they've gained from the economic environment, is us as intraday traders having the ability to know, well, when are they shifting, what does that shift look like, and how does that shift look like being depicted by the various orders that are going through. And then you get your retail investor, a smaller participant in the marketplace, but because there's so many retail investors that now have access to the marketplace, they are growing just by the sheer number of participants, and also people taking individual ownership, such as taking individual ownership of their money, not being at the mercy of pension funds anymore, or retirement funds, or the government supplying them into retirement, people taking ownership by investing and trading themselves. So you get the so-called beneficial shareholders and registered shareholders, and then we have the speculators such as us. We are classified as a speculator, as the intraday trader, or traders of various different time frames, and we specifically are intraday futures traders because of the incredible liquidity in the futures space and the ability to also to receive leverage. Then you also get your hedge funds who try and speculate and profit from how they see capital shifting and an opportunity shifting in the marketplace. And so you get the trader, and then locals. We are more, if we really had to define ourselves, we are local prop traders. The locals are really, the lifeblood of intraday discretionary activity. Now, from this pool of investors and speculators, they and especially the investors, they then effectively either execute in-house or they outsource their execution strategies in order to shift of how they're investing their money. So they either phone up an execution broker and say, I want to buy $100 million or $1 billion worth of European equity markets in the future space. So they offload in the DAX, they offload in the Eurostoxx 50, and they phone those execution brokers. The execution brokers that they decide upon are generally the ones that offer them the best price. So they'll look at a portfolio of different brokers, and whichever ones are giving them the best price will really get the business. Or they do it in-house. They have an in-house function to execute all their orders, all their client orders. Now from the execution side, and the same with the speculators, you can get hedge funds that develop the idea, develop the strategy, and then they find their execution brokers. So they either do it in-house or they deploy it. But then from there, you have a whole universe of different execution strategies, and we'll be looking at a collection of different execution strategies and order flow strategies that some of these brokers do use in the marketplace, and then how we trade around them and make the various types of trading strategies to execute effectively. So those execution strategies can be either discretionary, so they phone up someone and one of their traders executes traders, or they could the execution strategy could be utilizing HFT or algorithmic systems in order to optimize the pricing of offloading those strategies. And really the objective is to get the best price to gain more business. So if you're a broker and you have a great execution strategy, better than your competitors, you're going to get more business from your investors or your speculators. Then those execution strategies really try and some of these execution strategies actually try and profit from the execution strategies. So the client asks for a certain price, they try and execute a better price. So they either charge on the spread or on optimizing price. And really, with all these, as I mentioned, with all these execution strategies, it unlocks a whole ocean of different order flow patterns that we can trade around. And depending on the intensity of these execution strategies and when they come to the market, really gives us, as you see, it effectively becomes our locals' playground. All the executions that are going into the marketplace, onto their price ladder at various times of days, or different types of investors are getting in the market, well, then you see from these executions different types of order flow patterns and how we trade and how we profit from them and how we understand them, whether these execution strategies are some strategies that can last over an entire day, over an hour, and then how do we maximize by extracting the best opportunities in order to work out what these execution strategies are effectively doing. So that's really where it gives you a holistic picture of how come order flow patterns exist. They really, the root of the order flow pattern is from the execution strategies from the various investors and speculators that exist in the marketplace. Okay, just to continue, we'll be looking at execution strategy patterns. Now, as I mentioned before, it is the execution strategies that our traders are concerned with from these algorithmic and HFT systems, where we'll be able to determine profitable order flow patterns or underlying she-shift trend changes and bigger time frame trend changes. And that's all we're concerned with. The whole of how how they're built, it's not really for this course. But if we can understand of how these patterns are given birth from an execution perspective, well, then we can trade around them. Again, for these execution brokers, you get some really sophisticated strategies so they can really optimize their price, because if you have the best execution as an execution broker, well, then you're going to get all the business from particular investors that are having to put orders through in the marketplace. Remember, our context here is in the intraday and the micro time frame of execution. You can also see over a couple of days period potentially bigger orders going through the market, but those are more your type of larger distribution absorption plays, which we speak about in our absorption module. So the focus is not on theory in this in this section, but more or in this course, but more the price patterns that emanate from these various different execution platform, or the various types of algorithmic systems or HFT participants. Now, and as I've said, from here, of all the execution, there is just a mirage of different price ladder patterns, whether it be icebergs, machine gun orders. These are all in that link that I provided you, all the different types of order entry strategies, and whether it being time and volume slice orders. You need to identify the algo and its strategy. If it's a high feeding algorithm with liquidity to offload, then you trade around the algo in the time frame being executed. So sometimes you see an algorithm having to offload in a very short period of time a lot of orders on the order book, and whilst it's offloading at an extreme price. That extreme price could trigger stops. It's you understanding of that positioning of the market, and given that execution strategy that's being implemented in your market at that specific time, of how you go about trading it. Remember, the human discovers and unlocks the pattern, then it's our ability to trade around it. So the human has an incredible ability to pick up patterns in everyday life, whether it's a pattern with a friend or a lover, a pattern when you're playing a particular type of sport, a particular type of football formation, or particular rugby maul that's going on as it sucks in defense. We're trying to understand and unleash patterns, and in the marketplace it's no different. Is our human ability to really discover and unlock these patterns, and therefore trade effectively around it. Okay, let's now define an algorithm. Now, there is a link that I want you to click on that explains to you a little bit more in a little bit more detail of what an algorithm is. But with the power of the internet, depending on how far you want to go into this, you can really research into all the different dynamics. But effectively, an algorithm operates really on the premise, if this, then that. As an example, if the moving average the 50-day moving average crosses above the 200-day moving average, then it's going to purchase 50 Bund contracts. Or as another scenario, if it moves above the 50-day moving average, if the 200-day moves above the 50-day moving average, when there's 5,000 contracts that have traded over the period of 5 minutes after that moving average has occurred, then you're going to be buying 60 contracts in the DAX market. So you can really put together a whole bunch of if this, then those, then that scenarios in order to put the strategy in place. And there's normally a testing system that goes on with any development of any system, where you have the hypothesis that you want to test, and then you do the back testing. Then once the back testing has proven itself, you go into design phase, you analyze it, you implement it, and you experiment. And that's effectively the entire circle of development for algorithmic systems. And so really important, if you want to really investigate a little bit more, just research into algorithmic systems. But again, it's the patterns that emanate from these systems that is really, really important. So the types of algos, are any algorithm that operates off certain types of oscillators or certain types of volume events that occur. Some algorithms wait for whenever the market trades above the VWAP or below the VWAP, and you have all these sophisticated or very simple execution strategies, and really it's these patterns, and if we can observe them as traders, we can really execute effectively. So look at that link, research a little bit more into it, so you can get a really grounded understanding on what algorithms are. But when you do research it in the context of how they'll execute the strategies on the price ladder, and then how will you trade as a discretionary trader when you observe these various patterns that you see on the price ladder. Now let's define HFT, or high frequency trading systems. Now effectively, an HFT is an algorithm that operates at extremely high speeds. It's talking almost about nanoseconds, and it is important because there'll be a whole bunch of different algorithms, all with the same strategy, but the ones that are able to execute at a quicker speed will get the price that they want. So it's almost a race to on technology, on latency, and how fast their orders go from the broker to the exchanges and back again. So that's all an HFT is just an algorithm on time steroids, just really wanting to get those orders filled as quickly as possible. I've given some links there to describe a little bit more about almost the technicalities of algorithms. I mean, so on HFT systems, the co-location meaning of their servers being located at the exchanges, and then the order. So the moment the strategy needs to be executed, it is in a striking distance to the exchange because their servers are at the exchange. So look into those various links that I have provided over here. Will give you a really nice broad understanding of the HFT systems, and really the importance of speed for them in order to really optimize their performance. And there's a whole variety of types of different HFT systems. I provided some further links and further reading there, but I'm not going to be going this into detail, just for you to understand. These are just another form of execution strategies that do exist in the marketplace, and therefore exist on our price ladder, and it's when we observe them that we're able to trade around them. And those observations could be various different types of orders at particular times of the days, and then how do you trade around those orders. The objectives of algos and HFT strategies. So the main objectives really is speculate for profit. So they're just there to utilize the optimal strategies to extract very nanoscale profit opportunities, especially if it's an HFT system, or to attract liquidity for offloading client orders. You could have a really large order for a client, and you need to optimize by getting the liquidity in the marketplace. So if you're able to effectively boss the market around and achieve liquidity from all the traders or the locals that are in the market, or against other algorithmic systems or HFT systems, you want to attract the liquidity in order to offload your clients' orders. And to me, that's a really key. We look at that a little bit in detail with our absorption play, but also some of our front running plays, where effectively a market could be dragged one way, and actually, sorry, this is mainly in the spoofing and flipping section, where the market can be dragged one way when there's no liquidity until it finds a liquidity bucket, and then it can offload the orders. But this is made a little bit clear later on, especially in our flipping and spoofing section, and then therefore how to trade around it, and really executing best prices for their clients given the liquidity that their client needs to get away. So those are really the main objectives, is to speculate for profit, attract liquidity for offloading client orders, and make sure that they get that price for their clients. Now, the more important part, the objective of the discretionary trader, really it's to understand the order flow environment. Those traders who can understand exactly what order flow environment you're operating in are the ones who are able to quickly profit from various different strategies that are being executed dynamically in real time. And it's really important to determine, as we've mentioned throughout this module, the execution strategies in play in context to the technical landscape of the market. If you have a certain type of market profile structure or price or volume profile structure, and at a key level, or the market starts auctioning back inside range, back inside value, and it's doing it with really strong, good momentum velocity, because you're seeing new orders executing the order book, well, then you can trade within that technical landscape. You can trade very comfortably because the price action is warranting that type of trading strategy that you're deploying when you're seeing other time frame type of execution. And really, it forms from this is the foundation to really place profitable price ladder plays. Seizing up your environment, understanding the landscape that the order flow strategies are really operating. Those of you who want to investigate and explore a little bit more on platforms to develop your own algorithms, there is actually the TT Algo Design Lab, which really is a very intuitive, very easy to use, where you don't need to understand all the various types of coding language, C++, C#, and all those sophisticated that takes years of training, but rather a really easy way to design your own algo. So you can go to the TT Design Algo Lab, which is built into your the current platform that you do have. And also, so if we have a look now, that the most important part is that the human is still a more powerful operating system than the algorithmic machine, because we have the sophisticated biological development of intuition, and intuition really can factor in so many multiple types of patterns, linking different types of contextual arrangements, and this is why we train our traders predominantly, exclusively on a discretionary trading approach, because we believe in the human's ability to observe patterns and profit from them without being at the mercy of a system and a systematic approach that can break down if it's not learning in real time, until we have an artificial intelligence that really understands feeling, emotions, and understands how the entire body of opportunities is really governed by the emotional state of human beings within the financial marketplace. Well, then the machine does not quite compete with the operating system that's in between our skull. So really important to us to understand that HFT systems sit on the exchange, so they are co-located, which really reduces the distance of financial transactions. And so when you're designing your algorithm and you want to compete on speed, you need to ensure that you're co-located. And with a trading technology platform, most of their servers are co-located at the key largest exchanges such as Eurex and CME all around the world. And the algorithmic spectrum really is at speed it's a speed race with a world of different strategies. So the HFT systems are all these algorithms that really is this armed speed race where they're trying to separate themselves really from an effective strategy coupled with the ability to execute incredibly quickly. And again, the algo and the prop, as I've just mentioned, the algorithms in the prop industry, and why it's important to understand the discretionary trader will always survive, but must constantly evolve. Algorithms are as good as long as they're evolving, because the markets are always evolving, and that's why a trader with a great methodology, a great learning approach will always survive in the market, and he just gets better and better as a trader, provided he's constantly adapting. But humans have that ability, and that's why we at Axia Futures, and with all the traders that we train on our various training floors, really believe in an approach of enhancing a human's ability to understand patterns and pick up patterns, and therefore execute appropriately. Yeah, for those of you who want to explore even further, there's some great links and further reading, and we'll look on the next slide of key people in the social media space to follow, that you can really enhance your understanding of algorithms and HFT systems, who again are our part of the participant pool in the order flow price ladder space that us discretionary local traders participate with. And really, so if you have a look, there's a whole collection of links that I just want you to go through and have a look and really educate yourself in understanding all these different approaches. And there's also additional resources of key people in the space. You can look at these various people and their respective websites. My favorite gentleman to follow is actually Eric Scott Hunsander from Nanolex. So his website is Nanex, and that's his Twitter handle, so really worth investigating him. But we have a whole collection of people for you to follow and for you to understand a little bit more about this space, and then really put you in good stead when you're trading on the order flow ladder. And then a great book to read is Michael Lewis, The Flash Boys, and really gives you an understanding of how the rise of the algorithm and the HFT systems, especially the HFT systems in the financial marketplace. So thanks very much, and I hope this module has just given you a little bit more clarity of the participants that you will be trading. And when we go look at our order flow strategies, you will start understanding why these order flow strategies exist. So this is really giving you an understanding on where these patterns do come from.